Oh, hello, I'm Susie again from Esoteric Trading Solutions. I've done quite a few, obviously DVDs because I've had a lot to say just recently. A bit inconsistent, I know, when you don't get one from me for a week and then you get three within a couple of days. But I had a question from one of my clients re privacy coins, and I thought it was important to address that because it will be an issue going down the line, particularly when there is so much regulation. Pretty much, look, privacy coins are, as you know, transactions that the information, the name, address, and the date of birth of the person is not divulged, and basically all that detail is encrypted, so no one can actually see the identity of the person, who you are, your address, your date of birth, that sort of thing. And it's very, they use protocol and different encryption to unwind all that information, so you can't actually read that information even when you use certain tools to do that. And the one that really is the most private really seems to be Monero. So even a company like Chain Analysis, which is a law enforcement agency, is used to track private transactions across blockchain, and they collect obviously data and statistics for governments to basically find out whether certain cryptocurrencies that are private are doing any illicit, trading in drugs or terrorist activities and these sort of things. But I guess the overall issue with privacy coins is the market will be regulated. There is no doubt about that, and it'll be regulated like the traditional financial markets, like the equity market, the bond market, and the debt markets. And with regulation comes more security for the end investor. So in other words, with regulation, the people that do ICOs have to abide by a certain protocol, a certain template of what information they have to provide. The end investor, the end person is going to put their money in. If they lie on those prospectuses or whatever they say, they can be held accountable and put in jail. So with regulation, it's not a bad thing. Some people think it's actually a bad thing. It's actually a good thing because it protects the end investor. If the ICOs or the people that produce ICOs in the cryptocurrency market, if there's no regulation, they can basically say anything they want, and they can basically get money out of the end investor and literally run away, and the end investor is left with no money. So in my mind, regulation in the cryptocurrency market is inevitable. And if the big boys, the whales, the professionals want to play, regulation has to be in hand. Otherwise, they will not be able to invest in that market. They manage money on behalf of millions and millions of clients. For example, super fund money, your super fund money, if you don't manage your own self-managed super fund. And with that will come regulation, because they are managing a lot of money on on people's behalfs. And, it's just a thing that regulation will come hand in hand. There's no doubt about it. So things like Monero, Zcash, Dash, and there's a lot of others, whether it be Verge or Bitcoin Private, they do, use different features to make it very hard for third parties to trace transactions and activities. And what we've seen because of this is basically some of the exchanges in Japan and South Korea are basically saying no more to privacy coins being listed on the exchange. We've also seen that with CoinCheck, which was basically a Japanese exchange, and Monex took them out just recently. They've also said no. And also there is sort of rumour going around that Coinbase, because they're licensed in the US and looking to be properly regulated as well, Gemini, they may take off. And I don't even know what's on Coinbase because I don't use them. But any privacy coin, it wouldn't surprise me if it was taken off the exchange. Now, all this is related basically to the US's Patriots Act. And the Patriots Act came out, I can't remember what year it was, but it was actually it's a Cash Transaction Act. So it was all combined with illegal transferring of money to and fro, where the Patriots Act wanted to know the source of the money. Was the source of the money or the transaction related to terrorist attacks? Was it related to, funding terrorist attacks? Was it related to illicit drugs? And so where the money the sourcing and the trading and the transfer of money had to be sourced, had to be identified. So under the US Patriots Act, which came in, and then in Australia, because of that Patriots Act, we then had the Australian Cash Transactions Act. As dealers, we had to identify every client. We had to know that client through Know Your Client rules. We had to know where the source of that income came from before we actually transacted with that client. So, for example, what I mean by the source of the income, did their money come from inheritance? Did their money come from, say, the sale of a business? Did their money come from, because they're a high net worth client and they were getting paid millions? So where was the source of the income coming from? And as dealers, brokers or traders on a desk, on a front office desk, we had to identify and make sure the source of the money was legitimate. Now, if I was dealing with, say, a Chinese client, for example, or, an Indian client or an Asian client, and if that source of money came from prostitution or something like that, I would be doing something illegal as a dealer, a trader. I would be in breach of say if I was working with Morgan Stanley or Citigroup, I'd be in breach of their compliance regulations, but I'd also be in breach of the dealer regulations set down by my body who regulates me, but also in breach of the Australian Cash Transactions Act, and I could go to jail. That's how serious it is. So also, if we're a dealer or a trader on a front office desk in a big bank, any bank, doesn't matter, and if there's some irregular transactions that keep going through, even if we know the source of the money and we know our client, but say there's very strange transactions going through every day for, say, 1320, we as a dealer have to tell the cash transaction people, we have to do a report and tell them something very odd is happening. Now, there was a situation like that probably about at least 10 years ago, where there was all these suspicious transactions under $2,000. Now, generally under the Australian Cash Transactions Act, we have to report anything over $10,000. That's a mandatory. But even in saying that, if it's under $10,000 and there's a lot of suspicious activity because it's constant, the Australian Security Investment Commission and APRA will pick something up and they will call you and find out why are these, numbered transactions continually going through. And they did pick up someone that was doing trading, insider trading on the back of a merger that they knew about, and this guy got sent to jail, and the transaction size was only $2,000. So, know your client. The rules here in terms of the Cash Transaction Act, just like the US Patriots Act, are very, very strict. And white-collar crime, you can go to jail for a long time, probably longer than killing someone, particularly in Australia, that's for sure. So just looking at the next slide, as I said, the Australian Transactions Act is very, very serious. And when you're a bond dealer or an equity dealer, and you're filling out, client forms, and whether it be a business or a corporation or a high net worth, the question that always gets asked, obviously, is the business number and the tax file number, but also the source of the money. Where did the source of the money come from? Was it inherited? Was it business proceeds? Was it from, a high net worth client who has an occupation that gets paid $2 million a year or something like that? So, and it's even more strict on the retail client side to know where that source of money came from. So, for example, if I was dealing with, an Indian client or an Asian client, and their source of money came, say, from illicit proceeds like prostitution or something like that, I wouldn't be able to deal with them. I would not be allowed to deal with them because I'd be in breach of my own licenses that I have to hold with the exchange and also with AFMA, Australian Financial Markets Association, but I'd also be in breach of compliance in terms of the investment bank that I'm working for, and I'd be in breach of ASIC and APRA, which is really, really serious. So, and you just don't want that. But also in Australia, if you don't declare, say, interest or things like that, you'll be taxed at the higher tax rate rather than the standard tax rate. And obviously, if you don't declare on your tax return any sort of return, you could be scrutinised to, you could literally have a taxation audit, auditors on your doorstep. And the thing is, in Australia, they can go back at least 7 years or more in terms of your tax returns. They could be on your back for the rest of your life, and pretty much no one wants that. I certainly don't want that, that's for sure. So, the tax here, the tax audits, the tax authorities have a lot of power, and I suspect in America, the IRS, the Internal Revenue Service, also has a lot of power. So that's another reason why cryptocurrencies that are private, licensed and legitimate exchanges will be against them, because they'll come up, they'll come up in terms of compliance, but also the tax authorities could do full audits on the exchanges. They can demand, like they did with Coinbase, a complete list of the clients, what income they're earning, what money they're earning. They could literally tie a corporation or an exchange up for months on end with compliance, which is, added resources to the exchange itself. You could literally, they could literally put a company, at the brink, seriously, because they could ask you for anything, and they could go back years and years and years. So it ain't a great story when you've got obviously the authorities on your back as a corporation or as an individual. It's just really bad. If we look at Japan, the Japanese have regulated, and as you know, the Japanese is the second largest financial market in the world, but in terms of cryptocurrency, it's very, very large indeed, and the rest of the world generally will follow Japan. Cryptocurrency in Japan, as you know, is legal. ATMs are everywhere. But the Japanese Financial Service Authority, like the Securities Commission, is very, very powerful. And they're basically, my understanding is they have banned private crypto coins, whether it be Dash, Verge, Zcash, Bitcoin Private, and more. They're basically concerned about, possible illegality or criminal behavior with the use of these coins. And also, not only that, it puts in an enormous amount of surveillance time for the authorities to monitor these coins and to comply with the Patriots Act set down by the US in terms of where is the source of the money, where did it come from, and where is it going. So, to me, the regulators will just say no to private coins. It's just too much hassle for the regulators. Cryptocurrency itself is a hard one for the regulators, but nevertheless, if you have private coins where you don't know the owners of those coins, and then you've got tax considerations and the source of the money considerations, you're basically in breach of all the compliance that's been set down in other financial markets in terms of know your client, know the source of the money, where it's coming from, to avoid, say, terrorist money funding, the next bomb somewhere or whatever it might be. So, in my mind, if you're going to be a listed exchange, look like Coinbase, that's looking for licensing, looking to be listed and bona fide, looking to be credit rated, looking to be the custodian for all the institutional accounts, and you want to comply with the authorities, just like Gemini, who now is using the New York Stock Exchange monitoring system for transactions of crypto, then there's no way these exchanges are going to, in my mind, list private coins. There's just no way. Also, you can see this with CoinCheck. They removed their privacy coins. They were, as you know, taken over by Monex, another big player in Japan. So you're seeing mergers and acquisitions, and with mergers and acquisitions, the bigger the operation, the more likely they're going to comply with regulation. I have no doubt in my mind about that. Because without not complying to regulation, it's just going to cause them absolute headaches. You literally have the authorities, from the tax department sitting in your offices, maybe 6 or 8 auditors asking you questions every 3 minutes about things. And I've had authorities sitting, from the tax department sitting in treasuries when I was working in treasuries. And the stuff they ask you, you literally, spend all day trying to produce stuff. And it is, honestly, just a nightmare. It's just a nightmare. So, also with CoinCheck, as you know, it was hacked. with 500 million NEM tokens, and apparently they use Monero to get the proceeds or something. And again, this is another thing, with hacking of an exchange, it weakens the exchange could fall over, the clients could lose their money. Also, the Financial Services Authority, just like APRA here, the Australian Prudential Regulatory Authority, can force the smaller exchanges to merge with the bigger exchanges for the protection of the investor that's using the exchange. Now, in Australia, and I'll use an analogy here, we've seen that in the credit union market here. Smaller credit unions that are not banks, that have to comply with the regulations set down by APRA, the Australian Prudential Regulatory Authority for the banks and credit unions, basically are so small that the cost of compliance costs them a fortune. And also they have a high risk if, they have one big depositor withdraw funds, and they have a high risk of falling over. So APRA forced smaller credit unions to merge with bigger ones, and I suspect this is exactly what will happen in terms of the exchanges. The smaller exchanges will be forced to merge with the bigger ones, otherwise they'll just fall over with a lack of clients and a lack of funds. And that's pretty much what we're seeing. So we saw CoinCheck obviously get bought out by Monex Group, and Monex Group paid about $33 million US, which is cheap when you look at the purchase price. What Goldman Sachs paid for Polynex, which I think was $400 million US or something like that. So it's just a given. With regulation, these things will happen. Sorry, I always seem to take so long with this stuff. I'm really apologising for this. Everything just seems to go longer than I expect. So I just want to rush through this stuff because that's all been said. All of a sudden, 16 minutes is gone. So, Monero, again, they can hide all sorts of things within the details of the transaction. And, and basically ransom or hackers, malicious attackers will use Monero to get rid of their proceeds. And, it's just not going to be acceptable. The government, again, in the US closed down Alpha Bay, and, effectively, that's what they do. They'll just close down these companies without any questions asked. Dash has got a private feature called Private Send that can be turned off or on. Zcash has the same sort of thing, but the regulation is just going to happen regardless of whether these crypto guys that are a part of the coins, like this Rob guy, whether they like it or not, it's just going to be a given, and that's it. So the next slide, very quickly, gone through that one. So what does it mean? What does it mean in terms of if the privacy coins are delisted? Well, what it means is it's not going to be great overall for privacy coins. We've seen it also in South Korea. They're implementing a ban on anonymous cryptocurrency trading as well. That's been implemented since the 20th of January. So you can check out these references here and reference here. But overall, what does it mean? Overall, it's not great because it basically means that privacy coins are almost illegal, and it means that any licensed reputable exchange will not have privacy coins listed on their exchange, and the licensed regulatory exchanges will have the masses of the people dealing with cryptocurrency. They'll have the people trading there, they'll have the whales, they'll have the instos. All the small exchanges that are unlicensed will not have the clients or the liquidity. They'll be seen like the shadow market. Also, if the coins get delisted, you're not going to have transparency of where the price of those coins are. It'll be literally a market like an over-the-counter market or a best endeavours market where you don't even know where the price of the coin is. Plus, when a coin or any type of security or financial market instrument is not on an exchange, the bid offer spread, the buy offer spread, all of a sudden, rather than being $5 or $10, all of a sudden moves out to 100, 150, 200, wherever you like. How long is a piece of string? So on an exchange, Monero might be 420 on the buy, 425 on the sell, but on an exchange that's not licensed or not regulated, all of a sudden you might find the buy offer at 425.20 because you have a lack of users on that exchange, a lack of clients, and a lack of liquidity. And the whales will not be using those unlicensed exchanges. Also, if it gets delisted on all exchanges, then literally for you, if you're a holder of Monero or any of those private currency coins, you're going to have to try and get out on a best endeavors. You have to try and find someone that's going to buy the coin off you on a best endeavors or on an over-the-counter method, which is not an exchange traded market, which poses a problem for price discovery. Where is the price of this coin? And also a lack of volume or liquidity, which is a real problem. You may not be able to get out because there's no volume to buy your coin. So when you've got that situation, there's no stability in the price of the coin. The price of the coin could go to zero very quickly. And that is not good for the privacy coins. It's very, very detrimental to privacy coins. And for me, for my book, I'm not saying you guys how you want to do it yourself, but for my book, I wouldn't want to be exposed to that sort of volatility. The volatility in privacy coins that aren't listed on licensed exchanges is going to be a much higher on unlicensed exchanges than it has been before. And if suddenly a law comes through that every exchange cannot have listed privacy coins, otherwise they get closed down, then you're going to be in serious trouble because there'll literally be hardly any market for them. There's many ways a government can stop people from trading privacy coins. It's not just being listed on the exchange. As I said, they can do audits on the exchange. So what clients are actually, trading those coins. They can stop you from accessing wallets for Monero or Zcash or whatever it may be. They can, literally block internet sites to it. They can monitor those internet sites with surveillance and basically fine you, audit you, whatever it might be. So governments can do lots of different things to stop you from trading those coins. And for me, for my personal trading and investment, I don't want that hassle. I don't want a government official knocking on my front door ready to fine me or send me to jail. That's a bit of a scary thing. So for me, it's just not worth the hassle when there's so many other coins that I can invest in, well over 1,600. I just don't want to go there for myself. But that's what I'm expecting. You guys might disagree with what I'm saying, but this is my view. For me, it just wouldn't be worth the hassle for me. There's just no way around it. I do believe that Coinbase will comply with government regulation because they are looking to become the biggest cryptocurrency exchange in the US, particularly the New York Stock Exchange. The NASDAQ is looking to go into cryptos later. So, and they will want to comply with tax and, the US Securities Commission, which is a very, very powerful organisation. So what it also means is these privacy coins won't have any funding or more liquidity. They'll lose the support of clients, and there will be no transparency in prices. The ICO and the private cryptocurrency space will be, literally zero. There'll be no access to funding or growing. Essentially, corporate clients that pay revenue to use your technology, won't be using privacy coins. So, these privacy coins won't have any access to more revenue. Also will be tarnished with the illicit label. And, again, on the other side, funds, big whale funds, a lot of them have ethical investments. Ethical funds will not invest in this sort of thing because they'll be seen as unethical. Which is not great, and even high net worth institutions. But transparency and liquidity are the biggest things for any holder of any particular financial instrument. So it is a thing. So what does it mean for me? For me personally, no transparency, no liquidity, forget it. To me, the business won't grow. It's going to be a real issue. The price risk is going to be bigger than what it was on the liquid exchanges. The price discovery is going to be a real problem. I don't want the authorities breathing down my neck. Overall, for me, it is just too much hassle. I'd rather be in traditional markets where I know I've got security, of my investment. It's properly regulated, and the exchange itself is not going to fall down. So it is, for me, it's just one big hassle, and it's not something I'm looking into. It's not something I want to deal with, and it's inevitable that regulation will come. because traditional markets are regulated, and it's there to protect the end investor. So, you know, I hope you get something out of this, guys. You can disagree with me or agree with me. This is my thought. For me, I'm getting out of my privacy coins because I just don't think it's worth it. And that's my own personal opinion for me. You guys do your own due diligence, but I hope you get something out of this. Please keep well, keep safe, be kind to yourself, be kind to your friends and family, your animals, be kind to everyone, make this world a better place, and I hope you're all well, and I'll talk to you soon. Thank you.